Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. We've been in business every market day since October of 2002, coming up on our 23rd year in the business, if you can imagine that. I've been a full-time trader myself since 2013, so I'm well over a decade of trading full-time and enjoying it, just loving it. You know, so nice to be able to work from home, click a mouse a few times throughout the day, and watch. You don't always watch profits pile up, of course. We're in a drawdown in the options room. We're at all-time highs in the live trading room. I'm about 4% under my all-time high personally in my trading account. Um, but it is nice over the long run to see that equity curve slowly keep increasing every time we hit a new all-time high, and that's the name of the game. All right, guys. So if you're interested in joining me in the live options room, go to drstoxx.com, click the subscribe button, scroll down to the live options room. You can join us from there. If you want to add on the live trading room, which has been around for many more years, you can do that at a 40% discount. Okay, let's get started. I'm going to join the chart service here called TradingView, which has my preferred layout, although I do change this around a fair bit. But I've always got the three moving averages on here. The 21 EMA, that's kind of my short-term indicator. I like to say if it's above the 21, good things can happen. If it's below the 21, not so good things tend to happen. That's not always the case, but sometimes that's true. With a 50-period moving average is the black line, and the big green line down here, the granddaddy of all moving averages, is the 200. We like to see those stacked in a nice trending stock. So the 21 above the 50 above the 200, that indicates good trending action, short term, medium term, and long term. Can see this one. This is Cortiva. I'll talk about that in a minute. It's on my greens list. Not quite showing us the stacked MAs, but showing us from a linear regression channel perspective, a very nice uptrend down here into the pink zone. And I like to say, buy the pink in an uptrend, sell the blue in a downtrend. All right, but I didn't even want to talk about that. I want to talk about three major indexes. We've got the S&P 500 up almost to new all-time highs after a couple of days of weakness early on. Tuesday, Monday, Friday last week, and Tuesday this week after the Monday holiday were both rather bearish days of distribution on heavy volume. And so when you see a print like that, and let me zoom in here so you know exactly what I'm talking about. When you see a print like these two bars right here, these two red bars, takes us down below the 21, flushes out a whole bunch of stops below the LRC on heavy volume, you have to be a little cautious about the next move of the market, because when you start rising back up into that space carved out by those two red bars, you're going to get some people selling, right? Why are they selling? Well, some of them bought down here on the dip, and now they're selling to take profits. Some of them bought up here at the top, and now when they see price getting back up to near their price, their entry price, they get out so that they don't have to take a loss, or they take a smaller loss. And so that selling pressure tends to put a limit on the amount of upside you're going to have. That said, today is showing us just the opposite of that. We're not having any trouble at all getting up through those layers of resistance. So that's a big win for the bulls today. Now, tomorrow, we've got non-farm payrolls coming out before the bell, 8:30 in the morning. Market will be looking at those very, very carefully. The market really wants to see the Fed very dovish, very much on taking its foot off the brake, very much ready and willing to cut, not just 25 basis points, which I'm sure it will do in a couple of weeks' time here in September, but more cuts each time it meets until, I don't know, early next year. The market would really like to see probably 4 or 5 cuts by this time next year. And anything less than that, it's going to start worrying about too much, too strict of a money supply, and that's going to hamper growth. And then you're going to have small caps, growth names, meme names, and so on not doing very well. The market doesn't want that to happen, so the market would like to see a greater liquidity when it comes to money supply. right now the market is saying, "Hey, we're not worried about that at all. We're having a good time." So there's the S&P. Now the thing I want to show you on the ETF version of this, that was the futures contract, where you get all the overnight data and you get the European market trading and Japan trading and all of that. This is the same index, but only trading hour trading, and you can see we've got a big gap, right? We had a big gap on Tuesday when the market opened up again after the Labor Day break. Now we've come back up into the gap this morning. It opened right at the top of that gap, so the gap is now officially closed, which is a good thing. Unfortunately, now we also have gaps down below us because yesterday was a gap up. Today, I wouldn't even call today as a gap up, but yesterday was a gap up and pretty much held the highs of that gap. So that we've got a little bit of a gap down below that it could fill. Not that gaps have to fill. A lot of the times they don't. It's an old kind of a false myth that all gaps fill. They don't, especially the ones down below. but but still, it just shows a little bit of weakness, right? This price range yesterday that was carved out is not as strong as this price range in here where there's no gaps at all, right? Everything was just from one trade to the next without any space in between. Whenever you have a gap where very few shares trade hands in that space, in that price range, it's very vulnerable to a movement through it on the downside. And the same is true if the gap is on the upside. But with all of that said, we're almost right at new all-time highs today. We might even be there by the time we close. And if the non-farm payrolls tomorrow are at the very least in line with expectations, I think we'll see that follow through to the upside. Now, the thing is that I want to show you real quick is that this is pretty much about just a handful of stocks. Now, I have to say, when I looked at this morning, it looked a lot redder than it does now. But you can see this is the heat map. These are the stocks and how they're doing today. Amazon is really doing very well, and we might be long Amazon by the time the bell rings today. We are already long Facebook. Netflix is doing well. Walmart and Costco have been in a lagging sector, and they're starting to come back. But you can see the rest of that sector not doing very well. Utilities not doing very well. Real estate, home builders are doing fine today. The whole home building index is doing fine. But these are plays on REITs, right? Commercial properties and rents and that kind of stuff. They're not doing very well. A lot of your big drug makers not doing very well. Banks are kind of mixed today. NVIDIA and Apple and PLTR and Google, they all had good days yesterday, not so good days today. So there are pockets of weakness out there. It's not a rising tide lifts all boats kind of market, but that's okay. We trade the market we have, not the market we want. All right, so here's the thing. It's slightly cautious heading into tomorrow and next week. We're also in the thick of some pretty bad seasonality, but I really take seasonality with a grain of salt. The problem with trying to trade seasonality is that it is just an average. And when you look at the data graph, the data points are all over the place. There's not really a bell curve in the middle. So you do have tendencies, but it can be it can be a wide range between an average negative reading for September and a whole bunch of positives and a whole bunch of negatives that balance each other out. All right, so that's S&P. A little bit cautious heading into next week, but no reason here, in my mind, to be bearish. No reason, certainly even yet, to put on some kind of a hedge position. Although it's in the back of my mind to do that going into tomorrow, just to be on the safer side. I'm going to show you one other little cautionary note as well, but let's take a look first at QQQ, which is the NASDAQ 100, and you're going to see it's a little bit weaker, right? We're not up. The S&P is just under all-time highs. The NASDAQ is not. Why is that? Well, because the S&P has had a number of lagging sectors that suddenly in the last few weeks have started to catch on fire. Energy, healthcare, some staples, not all of them, some of the staples, consumer discretionary. Those are lagging sectors holding the S&P down. You don't have those in the Nasdaq. Now they're starting to catch up, and that is propelling S&P up to all-time highs. The Nasdaq is pretty much all tech. Tech can either be hot or not, but it usually trades as a group. And we're getting a little bit of discrepancy in some of the earnings reports. CRM, the big Salesforce, the big software company, data management, customer management software company, was not that great last night. And we've seen a few other software names, and Microsoft has been weak. Apple, until recently, has been weak. Tesla has been weak. Netflix has been weak until recently. So that's all driving the QQQ, and that's why it's not up at all-time highs. But here's the thing: if you have a trend line over the pivot highs of that pullback, you're going to see a very nice looking bullish symmetrical triangle or wedge that is forming, and price currently today, after a close at the 21 yesterday, is now above the 21, and it looks like we're going to knock on that resistance trend line there on the top and get a nice breakthrough tomorrow, if and only if the jobs data is congruent with a dovish Fed. If we come in super duper hot on the jobs data, which is possible, and the revisions of last year, they're going to do a whole year revision tomorrow. If that revision is not as bad as people think it's going to be, you'll likely see the market come back down. But I think the revision will be pretty bad. I think the expectations are still kind of low. I think we'll probably be a little bit soft, and that should help the market continue higher. It's counterintuitive, I know, but that's just the way it is. All right, let's take a quick look at the small caps. Here's IWM, and this is one of the cautionary notes I wanted to show you. There is a sell signal. This is an RSI, Relative Strength Index, sell signal at the top. This particular proprietary indicator, it's one built by a friend of mine, has a very good way of calling extreme bottoms and tops, right? Buy signals on the bottoms, sell signals on the tops. It's not very good when the market is choppy or in a trading range, or it goes straight down over a couple of days and then straight back up again. It tends to give false signals, but you can see after pullbacks, buy signals are to be paid attention to, and then after rallies, you get a sell signal. Pay attention to that as well. Right. Here's a sell signal after a rally that did peter out, didn't do exactly what it should have done. But here's a sell signal at the, well, I guess I did follow through a little bit, but it is a little bit late, right? It could have come up here, not down here. But this one up here was a very good sell signal, and that's not such a good buy signal. This is a better buy signal, right, off of the bottom. And here's a good sell signal. Here's a good buy signal. So again, they tend to work best. These RSI buy and sell signals sell signals work best after rallies. Buy signals work best after pullbacks. We've got a rally and we've got a sell signal. Okay. Does that mean it's going to roll back over tomorrow? No, these can play out a week or so before they actually get some traction. But the market is telling us that the momentum is waning, relative strength is waning, and yeah, take that for what it's worth. I think we also have one. Yeah, we do have one on the Dow Jones Industrials, on the futures contract at least. And you can see this is a bad buy signal because it's at the top of an uptrend. Here's a bad sell signal because it's at the bottom of a downtrend. So we can ignore those. But this one comes after a pretty good uptrend, so we have to pay attention to that one. And I don't think there's nothing on the S&P right now, and there's nothing on the NASDAQ right now, so that's all good. But there is one, I'm pretty sure, yeah, there it is, on the small caps. Okay, so just a couple of cautionary notes there. One good thing, which I think should play out eventually for the crypto names, which haven't been getting much traction. Ether has been doing a lot better, but let's look at Bitcoin, right? It's been in this range right here, up, down, down, 3 little days up, big red down, 2 days up, big red down. and it's not getting any traction off of this green support resistance flip. It's a flip zone, right? It was resistance, and then it was resistance. And now it's more or less support, support, support. All right. And the thing I do like, however, is that we're getting a rounded bottom. Rounded bottoms are always much stronger and more stable than a V bottom, which tend to peter out and give us another leg lower. So I like the fact we're seeing a rounded bottom. We are at a support zone. Yeah, we're a little bit below it right now. We've been a bit above it, below it, above it, below it. And we're just playing seesaw right now. And I do think that will resolve to the upside, but not just yet, right? We have to be patient. We've got a Bitcoin position open, and I've got lots of Bitcoin in my long-term account. And yeah, we just have to be patient. Ether, I think, is showing us something a little different, right? So this is a better trend, right? We're not very far from the recent highs. I don't think they're all-time highs, but they are recent highs, 52-week highs probably. And the way Ether works is that it likes to rally, consolidate into a wedge, break out and rally, consolidate into a wedge, break out and rally, consolidate into a wedge. Now, it's not doing very well today at all, but it's still in the apex. It's still above the 21, still within that wedge. I think probably tomorrow's an up day. Maybe tomorrow, maybe the Monday next week, we get the breakout and rally for Ether. And if I'm totally wrong, then you'd probably want to put a stop loss under here about 41.40 and hold that against any further downside. Okay. I think the gold run is over for now. It'll come back probably to like 3,500. Let's just call it 3,500. And it's gone a little bit too far too fast above valuation. But as money, it's been the most crowded trade, gold, most crowded trade in the market last few weeks. Everybody's getting into gold, and all the funds are buying gold, and all the central banks are buying gold, and China's buying gold. And when everybody's bought, there's nobody left to buy. The market can only go in one direction, that's down. Also, there's a long-term trend line. You would see this on the monthly and weekly charts that it's hit and stalled today. And we're printing a bearish reversal candle up here off of some extreme highs. So I think gold is probably going to cool off. And if money can start coming out of gold, where's it going to go? But into Bitcoin, into Ether, and some of the other cryptos. So I think that's a good... that's a pretty good bet going forward. All right. Now, let's take a quick look at the mags, because I do think, though, there is some weakness in this group today. Here's CRM. It's down on earnings. Now is down in sympathy with it, but not as much. In my opinion, now is a better company than CRM. They've got more good stuff going on, but that's just my uneducated opinion. AMD, kind of watching this in both rooms. We're already long AMD from like 115 several months ago that we bought in the live trading room. We're just hanging on to those shares in anticipation of another leg higher. We're looking to get out at around 200. It actually hit our initial target of 180, but I raised our target up to 200. And of course, that was the kiss of death, and it's been pulling back. So if you want to know why AMD is pulling back, it's my fault. But I do think it's setting up very nicely for a swing trade. You're seeing the same pattern develop in QQQ. It's a very good pattern. LRC is uptrending. 50 is uptrending. The 200 is starting to uptrend. Yeah, the 21 is rolling over, but at least it's still above the 50. Stacked MAs. LRC is nice and sharply 45-degree angle. And you're down here at the 50, just underneath the 2.0 standard deviation away from the mean, which it doesn't usually stay down there that long, nor does it stay up above the LRC for very long. And we're starting to get some volume coming in with some closes above the open, green candles. And that's what we want to see. It's not a buy yet, in my opinion. In fact, I don't really think it's a buy until it closes above that line. I would buy a quarter position there, and then maybe another quarter on top of yesterday's high, and then maybe a final half once it closes above the 21. That's how I would build a swing trade position. And then you'd put your stop underneath, what is that, Tuesday, underneath Tuesday's low. Okay, so AMD looks pretty good, but we're already in AMD. Not really interested. Oracle, not that interested. It's kind of breaking down here, and that's not a good look. Um, so Apple was on my no-go list for a long time. When it was down here underneath that resistance line and kept hitting it and falling back down, and then it did this, and I said, well, maybe it's starting to do something, but I never took a position other than my long-term shares, which I have in a I've had them for years, probably 8 years now or more. So I'm not selling those, but I do like what it's doing. However, it's not a buy up here in the blue zone. That's typically like here where you see it to start to cool off. It did do a nice pullback. It got wedged underneath the resistance trend line, and you could have bought it on that breakout. Confirmation day, follow through day, a little bit of a pullback with the market, and then a really big, nice up yesterday on the Google news, and Apple got some similar kind of news as well. So Google is just doing a little back and fill. It looks great up here at the top of that big. This was a court that came out and said the antitrust legislation or the antitrust lawsuit is not material, and so it's out. We threw it out. Get rid of it. Get that weak stuff out of here, and you can keep Chrome. There were a couple of addendums, but for the most part, that's what the market wanted. It's what the company wanted. And yeah, it's a big money driver, of course, for Google, all those ads coming through Chrome. So Google is in good shape. And in fact, I think I just said this on the social media board, StockTwits and Twitter, it can get up here to 250 in the next month, and it's still going to look cheap, really, based on what they do. It's just a great company. I wish I had more of it. I've got a little bit of it in my family fund. I have leftovers of a share trade we had in the other room in GGLL, the leveraged version, but I wish I had more. So NVIDIA is very flat today, and it's not really looking that good, I have to say. Gap down, hasn't filled the gap. Look at Google, of course. Apple is up above that gap. AMD is not quite there yet. Cisco, I'm not sure about Cisco, but anyway, the semiconductor space, it's interesting. So SMH and SOXL, they're actually doing pretty well today, but the big ones at the top, NVIDIA and I'm not sure about Qualcomm. Qualcomm's doing fine. Avgo's doing fine. Yeah, look at these nice strong days today. So those guys are driving Stoxx higher, but it's not spilling over into NVIDIA or AMD just yet. That should change. But here's the thing about NVIDIA. I think that this is it's a buy the dip moment. We're just not quite there yet. And what I've done in my own personal account, I really like to trade. I have long-term shares of NVIDIA, right? I've had them since I think my share price is like 20, something like that with all the splits. But I like to swing trade NVDL. And what I did this week was I sold a put on NVDL. We did that over in the other room, so that if NVDL closes at a certain price, we'll get put into the shares at a discount because of the premium. Right now, it's just above our strike price. So if it's a bad day tomorrow, we'll probably be put shares, and at that point, I think next week is the time for us to start swing trading NVIDIA. I want to take a good look at Microsoft because I didn't like what it did. Yeah, okay, so it's looking better now. I did not like what it was doing down in this area. It got below the 21 period moving average. It closed the gap. I thought, okay, it's going to close the earnings gap and then it's going to bounce back up again. But no, it just kept falling further. It had a very weak bounce into the 21 and it was right back down again. Right now, it's still looking kind of weak, right? You're underneath the 50 period moving average and the 21 period moving average. And while the NASDAQ itself is kind of breaking out of some of those things, and some of the stocks we've seen like Google and Apple are nicely above those things, Microsoft isn't doing it. Now, there are some big problems with the software space, right? It's been a lagging sector among all the major tech sectors. It's been, I don't know if it's the worst, but it is a lagging sector. And you saw CRM last night, and now is nowhere near 52-week highs or all-time highs, and some other growth names in that space aren't doing so well. The cybersecurity names aren't doing so well. So yeah, there are some issues here with just the software space, but Microsoft is the king, right? It's the best of breed. It's the second biggest or third biggest company on the planet. And when you see a dip like this after hitting new all-time highs just a couple of weeks ago on earnings, which is when you want to see all-time highs hit, Microsoft is showing us a potential discounted buy. So I want to see it. I just want to see a little more strength. I want to see more volume. I want to see more strength. We're not quite getting there yet. Tesla, I'm not so sure about Tesla. I don't have a good feeling for it right now. I know it did break out of this nice looking wedge, but then it immediately came right back down and closed below the 50, below the 21, below the 200. It had a very nice bounce, and there was some news related to that. I'm not exactly sure what, but that didn't hold either. And it's right back down again to test the moving averages and the top of that little trend line. So you can buy the dips in Tesla for short-term swings higher, but as far as a good sustained rally, I don't see it forming yet. And also, I'm looking down here at volume balance that's leaning bearish, volume balance here that's leaning bearish. This is all on the pullbacks, right? You've got the RSI below the 21 EMA. You've got a red MACD sell signal in play. So it's just a wait and see for me. I like Qualcomm. We're long Qualcomm in the other room. I really like it a lot. It's almost up near, well, not quite, but it is. If we look at the bigger pattern here, let me get rid of these things. You're going to see this a lot too. This nice looking head and shoulder-ishy thing, or we can talk about a cup and handle. Either way, it's bearish, bullish, and we're banging up on the neckline, very close to the neckline. Is a big update today when some of the tech stocks aren't doing so well. Yeah, Qualcomm looks great. Avgo reports earnings tonight. It will move the semiconductors tomorrow. So if it's a very good report, and I think it should be, we should see semiconductors move much better than they have been, right? So we actually bought some SOXL in the other room. We bought it this morning on the dip, and it's up nicely so far, just as a way of playing what should be a pretty good move on Avgo. Now, I could be totally wrong. Earnings are always a bit of a crapshoot, but at least with Stoxx, you've kind of got your money is diversified, and we just have it as a small position. So we're along Facebook. It really got up to some nice highs, 760 plus. We've got calls in the options room, and everybody was kind of, high-fiving when that was going on, because our calls went up over 50% overnight. And then it all came right back down again, and I'm not exactly sure why. So there is some good news that is associated with the move today. Hopefully that is material and stays with the company. It's still right at the 21. We're still above the resistance trend line. And as far as I'm concerned, as long as we stay above the 50-period moving average, we should be okay with this position. ASML is a big semiconductor doing pretty well, showing that inverted head and shoulders. Netflix has been weak, but looking better, right? So one of the things you look for when stock is in kind of pullback mode, right? It keeps going down, keeps going down, keeps going down. Those little pops don't hold. You want to look for a higher low. And that's exactly what we've got. Once you've got the higher low, you want to look for a close above the most recent pivot high. That's exactly what we've got right now. So Netflix is a buy. As far as I'm concerned, it's a buy. And I have some friends in my pro trading group that went long today for the first time, swing trading. And you're going to, your first target is up here at 1337. So you could leverage, that's about an 80-point move. You could leverage that with some calls, but frankly, it's probably better to trade the leveraged fund for Netflix rather than Netflix itself. Now, last one I want to look at is Amazon, because I'm interested in this move right here. So yeah, that is almost up at all-time highs, and there is no sell signal in sight. It is a breakout move of that wedge right there. Very nice looking bullish wedge. Let's zoom in a little bit. And I suspect that Amazon will have a pretty good bid going forward, heading into earnings, which are a good 6 weeks away. So uh, I think we'll either be long Amazon or Netflix. Um, I'm not sure we'll do Nvidia. Not sure we'll do Microsoft just yet, but those are the two that I'm looking at for some calls in the live options room for before we get to the bell today. Okay, now quick. Well, okay, I've got like 3 minutes left, so I'm sorry, guys. Um, I won't have any time to do chart requests. But if you want to type your ticker symbols into the live option trades room, I'll take a look at those and I'll post some charts for you. We've got a few things on. We're in some OKLO calls. It looked great yesterday, not so great today. But as long as we stay above the 50-period moving average, everything else looks good, right? It's a stacked MAs, uptrending LRC. We had a buy signal and a MACD forming. It didn't follow through, but volume here today is very light. So I don't think we need to be too concerned. I like this H row, but it's down at the bottom of a support line, and it really needs to start getting moving up higher before I get interested. We looked at AMD. I really like this one, TTMI. It's a inverted head and shoulders continuation pattern, one of the most reliable patterns in the market. And it did poke out above the neckline this morning, but like a lot of things, like Facebook, came right back down again to close pretty much flat. But this is a good looking pattern. It's a strong company, and that should be breaking out anytime very soon. I think Dash is a buy, but it's a little bit on the weaker side today. CTVA is in the agricultural space. It's a materials stock, and the whole materials sector has been lagging, but it's starting to play some catch up, along with the staples sector, the healthcare sector. Those are kind of the three main ones that haven't been very good and now starting to come back. Consumer discretionary, we could add that as well. So I think I would watch for a breakout above that little pullback line, because this is a very strong fundamental strength here is very good. Growth is very good, and it's a fairly safe name in a market like this. We're long BN in the other room. It's off to the races. It's a very slow moving stock. It's an asset management firm in the alternative space. So it doesn't do equities. It does energy plants. It deals with commodities. It invests in smaller companies. It's a private asset management corporation, and it's got a lot of fingerprints in industries that will do very, very well once rates start coming down. Right? Home builders, utilities, they're big into utilities, they're big into data centers, and those things are going to do really well once the. Anyway, so we bought down here at the low, and now it's up near the high, and it's almost on breakout of this nice looking pullback trend. And this is what you want to see in a pullback. You don't want the sharp drop pullback that bounces weekly and then rolls back over again and forms a new low, right? You don't want to see a pullback that looks like this, because that usually gives you another leg lower. You want to see a pullback that, so uptrend, soft pullback, uptrend, soft pullback, uptrend. That's what you're looking for, and that's exactly what we've got here. Soft pullback, uptrend. Okay. OUST is a growth name. It looks very good right here. We're holding the 50. We're up at the highs of the day. Very low volume, however. So, and I think a lot of traders are kind of off on the sidelines today with the jobs data coming out tomorrow. But it's not exactly a soft pullback, but you've got the uptrend. You have an A, B, C pullback, and that's usually about the end of it, right? And you've got the higher low. Here than this one, which is higher than this one, and so on. BLD is a good name to watch in the home building space. It is showing breakout today. Flex is up at 52-week highs, if not all-time highs in breakout mode, looking really, really good. Very strong chart, very strong company. We have MU calls in the options room, and it's doing great today. We got in it yesterday. It didn't really do much. Today, it's just off to the races after a little bit of a dip down. It's just been up, 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 up. So I love this chart. This is a cup and handle continuation pattern. Maybe not the strongest, but maybe the second strongest reliable pattern. I like SOFI. There was something about it out today. I'm forgetting what the news was, but it's good. Bullish engulfing candle today above the 21. Soft little pullback, short pullback. Good volume coming in on the accumulation side. Yeah, SOFI could be bought right here. And Reddit is about to break out. Nice rounded bottom. Look at that. Perfectly formed. Perfectly formed. This is a shallow pullback, soft pullback. That's what you want to see. Rounded bottom, just as it did over here. And now just about ready to break out. So Reddit could be another one we're in before the bell. And ALAB is a very good semiconductor company, and it's ready to go. Yeah, so there's some good charts out there, folks, really good ones. We're in some of them already. And I don't want to overload us with longs if tomorrow turns out to be a disaster, because it possibly could. Don't think it will, but it's possible. And we haven't really had a big disastrous day in a while, not since the tariff crash in April. So we're kind of due. We're kind of due a little bit of a reckoning here with the markets. We have to be careful, have to be cautious, but still, if we're just looking at charts and strong companies, there's a lot of good ones out there. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the afternoon. I'll produce this video, put a link in the room for you, and then we'll trade the rest of the day together. God bless. Bye for now.